In any game, knowing the rules and how the game is played is critical. Stacking is not just an act, it's a mindset where gold, silver, and platinum are tools or vehicles. Rich stackers understand that wealth is made with a mindset where physical gold and silver provide a foundation and insurance and are not the entire plan. I fully understand that a video like this might be hard for some of you to hear, or some of you just might not be ready for it. But as we enter 2023, a new year, we have to evolve as stackers and investors. Frankly, I'm just sick and tired of our failed American dream, or should I call it the American lie? The lie that each of us has the same opportunity to achieve success and prosperity through hard work, determination, and initiative. That if you go to school and or get a good paying job and work hard, buy a house, invest your money in a 401k, that somehow you're going to live a high quality life. It just isn't true. And before you at me in the comments, ask yourself, if I'm wrong, why is there such a gigantic wealth gap? Why is it that the top 1% overwhelmingly control a majority of the country's wealth? And why is it every time we have a crisis, we later find out how the rich made billions of dollars as a result? The game is rigged, but we don't stand a chance if we don't play the game anyway. At the same time, we can't continue to play the game with the same instructions and rules that were fed to us like propaganda. The reality is, most of us have JOBs, and that just stands for just over broke, because that's exactly how your employer tries to keep you. They pay you just enough so that you don't quit. Meanwhile, the entire system and lawmakers are more concerned with propping up and protecting corporations and stockholders, but not small business owners or regular people as they tax us to death, and Amazon pays nothing in taxes after they make billions of dollars. Jerome Powell's already told us what was important to him, but maybe we weren't listening. He said the key to fixing inflation is by making us unemployed, as opposed to addressing issues with the corporations and their profits. What exactly does this have to do with stacking? Well, I have two very harsh critiques of the stacking community, which I've shared in the past. One, somewhere along the way, we accepted that gold, silver, and other metals are simply a hedge, insurance, a way to be our own bank, and other things that you often hear recited. And as I've said, and I will continue to say, I also believe stacking gold and silver is an investment and should be treated as such. And though I know it's not popular in the community, I think that's just the reality. My second critique is that we tend to act as if stacking is the end game, like the Avengers. It isn't. Instead, it's simply the start of a new phase or a new era for those that are willing to embark on the financial journey. The hardcore reality is I have yet to hear of anyone who has purely saved their way to becoming rich. That just isn't how the game is played or won. The reality is that the game, aka our financial system, does three things in particular. It punishes savers, it requires that we have spenders and debtors, and three, it rewards investors and businesses and business owners. The rich stackers know this, while the rest of us have to discover and learn it ourselves. It's true that many of the rich hold their wealth in precious metals, but when you really listen to all these experts, what you hear is that they say they hold physical gold and silver, but they do it for very different reasons. Go back and listen to people like E.B. Tucker, Steve Penny, Rob Keens, Lobo Tigre, Lee Goriantz, Jim Lewis from Wall Street Silver, and of course my favorite, Rick Rule. While all of these people are big believers in gold and silver, their perspective is just slightly different than most stackers.
And I don't know if we actually do need gold and silver. So where do you stand on those two?
I need gold and silver for my own psychological well-being. Gold has functioned for a millennium as a form of insurance policy. Interestingly, because I buy it as an insurance asset, I sort of hope it doesn't go up in price. I'm struck at conferences by people saying with some glee that gold could go to $10,000. The circumstance that would see that occur would be very difficult on your lifestyle. And my lifestyle's damn good. So I don't want to see it altered.
Did you hear, Rick? It's an insurance that he doesn't particularly care to see it go up in value. He continues by saying this.
Yeah, okay. For me, to speculate in metals, I speculate on silver.
There's better metals to speculate on, yeah.
I don't know why silver outperforms gold in the last half of a bull market. I'm not smart enough to know that. But I am smart enough, having watched bull markets for 50 years, to know that historically it's been true. So I invest in gold and I speculate in silver.
Notice that he said that he invests in gold and speculates in silver, but it goes even deeper than that.
My main involvement in the markets now is going long precious metal stocks and other metal stocks, uranium, copper as well.
Similarly, I allocate lower risk capital to the high quality gold stocks, and I allocate my mad money to the silver equities. Doug Casey pointed out to me years ago that the market capitalization of silver equities is so small that when the generalist money comes into it, the effect is like trying to siphon Hoover Dam through a garden hose. There isn't sufficient market capitalization to hold the money that comes into it.
Notice that he talks about equities, meaning mining companies. That's the biggest secret of the rich stackers. Their physical stacks may be large, but the rest of their money goes into something other than physical. Think back to their interviews. They talk about physical metals, but they also talk about investing in mining companies, be it majors, juniors, explorers, developers, or producers. All of this leads me back to a couple of videos that I'm going to recommend that you go back and watch, because this is all about a mindset as we enter 2023. And starting with this video where I discuss the biggest problem for us as stackers is the lack of a standard education around how to stack. After that, I did this video where I introduced this idea of the financial trinity of gold, silver, and cash. And all three of those actually need to be in our hands. And from there, I did this video where I introduced Exeter's pyramid of real money and how ultimately all the derivatives are going to result in a crash that comes back to gold and other precious metals. Then in this video, I introduced my Stacker's pyramid of real assets, where our personal finances and precious metals serve as a foundation. And from there, we use that to create entry into other real assets like real estate, businesses, and equities. I also warned you that as we move up that pyramid, the risk, the knowledge needed, and the leverage gained all increase. But that leverage is how we amplify our returns beyond our normal limitations, which leads me to this slide, which is about how we protect our wealth, grow our wealth, and ultimately enjoy our wealth. Ultimately, stacking is the first step because it's how we protect our wealth. But as physical stackers, we are limited to the amount of money we can earn, save, and convert into metals, which makes growing our wealth more challenging. If our fundamental thesis is that metals and commodities are entering a bear market, then why in the world would we not consider investing in companies that find and produce these commodities for leveraged growth? Leverage is the key. This is precisely what the rich stackers know and do that most of us will not. When you look back at every commodity bull market, you will find that physical commodities do incredibly well, but the related mining stocks outperform by significant percentages. I'm talking about numbers that can't be achieved by holding physical metals. Remember the words of Rick Rule, that he allocates his funds to gold and silver equities, but that this is in addition to his physical holdings. Before I share what Rick Rule said next, I want to ask you for a favor. I want to ask you to hit the like button if you're finding any value in this content, if you're learning something, or you simply want to support the channel and help us reach more people. While we're taking a quick break, also, let's congratulate our winner of the Pembex Silver Eagle, Chris McCormick. Congratulations, brother. I'm very happy for you. Give me an email and I'll get that out to you as soon as possible. Now, for the rest of y'all, don't be over there being salty. Remember, this is all about good karma. So give a little love to Chris. Share that in the comments. Congratulations, Chris. Back to my hero, Rick Rule, and actually the paid sponsorship portion of this video, which is brought to you by Uranium Royalty Corp. Ticker symbol UROY, UROY on the NASDAQ, and URC on the Toronto Stock Exchange.
I like the garden hose analogy because it's about silver, but if you start talking about the uranium equities, then the garden hose turns into a paper straw.
Correct.
So that's
Correct.
that's an interesting.
And frankly, that's a higher probability outcome, I think, than silver. But remember that we do a strange thing with precious metals. We take them out of a hole in the ground called a mine, and we put them in a hole in the ground called a vault.
Mm-hmm.
Mostly they don't go away. You know, when you look at supply and demand, silver does get used in some purposes, but most of the precious metals that have ever been mined are still supply. You have 10,000-year-old supply. Uranium goes to uranium heaven.
Yeah, I was going to ask about that. Uranium, are you long uranium?
Very much. I'm buying the shares of uranium stocks at this point.
I know. We're not supposed to talk about metals like uranium as stackers because uranium clearly isn't something you want to have stacked around your homes. Regardless, like Rick Rule says, I like situations where the outcome of an investment is a matter of when as opposed to if. And that's what Rick Rule is referencing.
So while most people were overcome with fears of uranium because it hadn't performed, I looked at a commodity that was necessary for the ascent of humankind. I looked at a commodity where either the price had to go up or the lights had to go out. I didn't care about the narrative. I just knew that people wanted to stay warm and have the lights go on.
But right now, uranium's about $50 a pound. Marginal cost of production of uranium is about $50 a pound. The last uranium bull market started in about 2001. Uranium was $10 a pound. Over the next 6 or 7 years, it ran to $150 a pound.
Oh, wow.
This is exactly why uranium presents itself as an incredible investment opportunity in my mind. Admittedly, I don't know enough about uranium to reliably pick the companies which are going to be the biggest winners, but that's exactly why I love, personally own, and agreed to take the time to discuss UROY, or Uranium Royalty Corp. Because I don't need to know which companies to invest in, because since January 2020, Uranium Royalty has already done all the hard work for us by owning 15 royalties for some of the best companies in the uranium space. As they became the first ever and only uranium royalty company, I personally love royalty companies because frankly, their whole business model is pure genius. Royalty companies don't own heavy equipment, bulldozers, cranes, drills, or any of the traditional things that come with a mining company. No, instead they've used their financing to secure access to a percentage of what each asset produces. So labor prices go up, not their problem. Gas expenses cutting into the company's profits, again, not their problem. Essentially, royalty companies de-risk themselves and have nothing but upside by creating a scalable business model that is also recession-proof, the income is guaranteed, and while their expenses are minimum because they don't actually have a lot of employees. As stackers, we largely focus on the green movement and the impact that it will have on metals like silver and copper. However, the past 2 years have made it very clear that we don't have enough capacity to meet the energy demands as we move away from fossil fuels. What the world and Europe in particular have quickly discovered is that nuclear power has to be a part of our today and our tomorrow, as uranium provides a way of creating zero emission, clean, and safe energy from the most efficient element in nature. Roughly a 20-ounce cup of uranium is enough to supply all the power you will ever use in your entire lifetime. Because of its ability to generate electricity reliably and effectively, uranium has made a comeback like bell-bottoms, afros, mini skirts, and platform shoes. What's amazing to me is that in the United States, where 20% of our households get electricity from nuclear energy, almost 100% of our uranium is imported from Kazakhstan or from Russia. And given the current state of affairs, you can see why this is problematic. So much so that the Republicans and Democrats, they agreed, I know it's hard to believe, they agreed that this was a national priority. And additionally, the Inflation Reduction Act invested $700 million to support the development of domestic uranium, which all must be spent by 2026, all because of underinvestment by Europe and the US in the previous decades. So we find ourselves in a place where Rick Rule refers to as a situation where the price must go up or the lights go out.
And what would you say, Rick, has made you more money over the years? Knowing where the price of gold is going to go, knowing where the price of oil is going to go, i.e. macro analysis, or gold company A is much better than gold company B?
Focusing on the firm has been much more important for me.
UROY now has more than 1.5 million pounds of U3O3 on their books, and they keep adding more and taking more supply off the market. Currently priced at around $2.30, analysts expect the stock to rise to $5.70 or double in price.
People misconstrue what stocks are. You know, they sort of act as though they're ticks on a computer screen. They represent fractional ownership in businesses. And if you don't have enough expertise to understand at least something about what the business is worth and might come to be worth in a certain circumstances of, probable occurrences, you have no business owning the stock.
Obviously, this is not financial advice and I'm not equipped to provide it. I can only share information and tell you what I'm doing and what I have done. From the research and from what I can tell, this uranium play makes all the sense in the world. And I know that I want exposure to this part of the market today as well as over the next few years.
And if you have a time frame expectation around your investments that's unrealistic, your expectations are unrealistic. While many investors have trauma holding stock over a long weekend, I would say that my average successful holding period is between 5 and 6 years.
Because I know the game of capitalism can't be won by holding the ball and waiting for the clock to run out, I know that rich stackers absolutely hold their physical metals, but they make their real money in the equities aspect of the market. And it's the only way to grow your money by multiples. That's why I believe in UROY. We can't continue to think that we're going to make it by the leverage or the effort of our own dollars. We've got to find leverage somewhere else in the markets. With that, in the comment section, what are some of the other ways the rich stack differently than the rest of us? Are there any companies that you've researched that you also really like? And also, give yourself an A+ for making it all the way through this video. And thank you for being part of Stackers. Always stack smarter and never stop learning.